David, it's Michael Douville in Scottsdale, Arizona. Thank you so very much for this afternoon being able to speak with you. And you're with Charles Nenner Research. Would you care to just describe a little bit of your research and some of the things that are going on in your world?
Good. So I met Charles. Thank you very much, Michael. We've been buddies for a few years. So with Mutual Admiration Society, I had the great merit to write an intro for your book, which is a plug for your book now. It's a great book. And one of the first pieces in it is by somebody I know very well who wrote about, if I need a real estate question, I go to Michael Douville. So that's all I got to say. But I met Charles Nenner, Dr. Charles Nenner, 15 years ago when he was Goldman Sachs' secret weapon, I guess. And he came up with a system to predict markets when he was in medical school. That's why he's Dr. Charles Nenner. And that's a whole story for maybe another time how he came up with it, but it predicts moves in stocks, bonds, commodities, currencies, and economic indicators. And one of the things we were just talking about is to talk about economics, which I will do in a second. And our whole system is predicting moves, which, as you have been watching for quite a while, have been very accurate. I'll let you say it. I don't even have to say it. And so we'll talk about markets and what we see happening in stocks, bonds, crude oil, nat gas, war cycles.
Yeah, that's a scary thing.
Kind of what people are very afraid now, not just because they're down in money and politics, but what's going to happen in the world. And I'd like to discuss all that. But
yeah, I think the first thing for people who are looking at the market has just been so volatile in the last 3-4 weeks, actually months.
Right.
Everybody's really interested in your expertise as to what your thoughts might be on that.
Michael, remember what we said at the beginning of January? Remember?
Yes, absolutely, of course.
What's happening right now?
Yeah, you've been prescient. You've been absolutely on target.
And it's interesting. People have a hard time hearing. So we said, and everyone watching, by the way, just write to the site, charlesnenner.com, and they'll get a free look at the research for a month, and I'll catch them up with the January 3rd report that said everything will pretty much be down till April. And we're February 10th, and we're certainly been down to the level we said, with a little bounce yesterday and today, but we think it's going to be negative because it's not just cycles, which come from the Greek word circle. It's top to tops in any data series. Again, each thing's a little bit longer explanation, but it's not just target. We look at Elliott wave also. And so when they all line up, that's what we do differently. It's not just one system. It's a bunch of algorithms that we want them all to line up. It's like when you go to the doctor and you sprain your ankle, break it, fracture it, you're not sure. He takes a lot of x-rays. We take a lot of x-rays at the market in stocks, in bonds, commodities, currencies, economic indicators, and we want to see, do they all line up, and it gives us a picture. So, for instance, crude oil, when we called it 147 5 years ago, people think crude's down 60%. It's down 80% because it was 147.
I remember that, yes.
Came down to below 30. But we forget it was $9 not that long ago. It wasn't 50 years ago, it was $9. And we called it all the way up to 147. We don't know why anything happens. It's just based on repeating patterns, and then the reasons show up, and those who go on TV and radio explain it. We don't know why. We have no, as you and I have talked about, we have no idea why anything happens. It's just, since it's right, we consider the technical fundamental, and no one wants to hear it, that's fine. It just, our clients like to hear it. So anyway, so crude came down from 147 to 49 once. And then 4 years later, it went from 97, which it had been for a couple of years, in that 97 to 110 range. It's been down, which is what we called. We think we're near bottom. It's going to be back up to 60, 70 by the end of the year, if not earlier.
Gosh, that's so hard to imagine that that's going to happen.
Well, but a year and a half ago, when it was 97, could you imagine it would go to 25?
No.
So I'm just saying, right now, and let's say it goes back, and in a year they go, boy, you guys are like Stephen Curry, you're hitting the three-pointer, right? They'll forget also. That's the way it works. Your people are watching. I just think all the news they're watching is making them crazier. They shouldn't watch it. They should just, I don't know, I think you've been watching our research, so you know that it's been pretty good across the board, including stocks should be down till April, back up, and down, and then next year they're going to come back. But next year, towards the latter part of the year, is a major top in stocks down for years.
Wow.
Years.
Now,
That's the big picture.
and just in recent times, so between now and April, how low do you think we're going to be looking?
Let me read you what we said in the report, which you saw, and I will just give you targets. That's how technical analysis works. It goes from one level to another, and then when it gets there, we reevaluate. But first target is 1770, which is futures, S&P, Dow 3920 futures. I'm sorry, the NASDAQ 3920, and then the Dow, a little above 15,000.
That's first target.
First target, and if it goes below there, it goes below there. Another major point down, a major percentage down. And this moved down. So we think we wouldn't be long. I'm telling you, I think people are going to get beat up into April. And we said this all in January, as you saw. We called Google down. We called Apple big bottom in April. April's a good time to buy stocks. But of course, if people are down, are they going to want to buy then, having been down in stocks?
No,
Very hard emotionally to do.
it's very, very hard to do.
We're aware of that.
So at least there's some kind of silver lining in that, and if you hold till April, you're going to start getting better. But the ideal thing would be to get out now and maybe get back in April.
Or hedge. Let's say someone's got $1 million in stock. They could buy the VIX, which is a volatility index. At least they're hedging. That's what the word hedge means.
Sure.
Cover. People don't know how to do that. I mean, professionals do and trading firms do, but not everybody follows our system. And since it's been right, you think, we do the best we can. You had asked me before about economics.
We did.
Right.
One other question, David. Is it too late for someone to get out now?
No.
So should they wait for a bounce, or do you think that...
Bouncing now, well, look at today. Today was a boxing match, not just a bounce. But we're real close, and to a down move, because we think it's a combination of cycle top and a wave 5 down. Let me read you what we actually wrote. So that's probably the best thing, what we said today. I'm the editor, even though I don't put my head in the screen. We've got a lot smarter people doing this. U.S. equities are on a sell signal since Friday and moving to our first downside targets, S&P 1770, NASDAQ 3920, Dow 15171. Cycles are down. Markets are volatile. Could have some bounces. Here are the stops. These are short-term bounces off the low, we think, but we think down to April. So that's if someone wants to play for a day or two, it's not so easy. But if they're thinking, I'm down 10, 12%, how could it go lower? It could definitely go lower. We expect it will.
Well, that's really good advice then. So what do you think of the economy in general?
Okay, I'm going to read you what we said. And again, everyone writing in will get this. So I encourage everybody to do it. We send this January 24th. Summary of 5 economic indicator forecasts. Okay, non-farm payrolls, according to cycles, non-farm payrolls are topping. That could surprise markets soon. CPI, Consumer Price Index, inflation's low. We see CPI cycles topping. We think the greatest danger continues to be deflation. Not in crude. We think crude's going to go back up, as I mentioned. But
Crude's already bottomed.
That's what we think. It could be one more move down to 26, but we think cycles are down, and the Elliott wave move that, again, we showed 2 weeks ago, if you remember. The last 4 years is a wave 5 down. We're right near the bottom.
That's a big wave down.
Yes, but that's usually what happens in a wave 5. See, we're having a wave 5 now in stocks.
Wow.
So, this is math. Nobody likes math except for a few percentage of people. So talking about it, but this is what we see, and this is what runs the show, we think. Charles came up with this. Brilliant guy. We still think the greatest danger is deflation. ISM, Institute for Supply Management, quarterly cycles. This is based on data every quarter. Cycles top, weakness next few years. Unemployment, cycles show we're seeing the low in unemployment, which is the same thing as what we said before about the top in non-farm payrolls. Makes sense. Payrolls are topping, unemployment's bottoming, so they're both going to reverse. Payrolls will come down, and unemployment will come up.
Do you have a time frame for that, David?
Yeah, it's happening. Again, it's happening the next quarter or two. And GDP cycles are topping again and down, confirming our outlook for a weak economy. And like we say, longer term. Let me just say one thing that I'd like to stress. 1981, 1982, I give you $10 million and say, go make 2 trades, buy stocks and buy bonds. And the stock market was 1,000 at the time. The Dow was 1,000. It's now 16, 17, 18. It's been higher. It's gone up 35 years. Bonds were what?
Bonds were in 81 were pretty high.
So if you bought bonds then, the bond rates were high. So if you bought bonds then and rates have come down, obviously the bonds have gone up in price.
Right.
So for 30 years plus, both bonds and stocks have each one gone up in value. So when people say they go opposite, that's proof that it doesn't. Every 7 years, the stock market got beat up, right?
True. Right.
And so at times it was best to be out of stocks, but they've both gone up. If you bought 1966, if you bought stocks, for 16 years, they were flat. The Dow was 1,066, it was 1,082. Last year, Charles got on CNBC, if you've seen the link,
Yeah.
in December, January, said it's going to be flat. Not going to be more than 5% up, and the whole year was flat. Imagine this, we think it's going to be worse, but imagine this the next 16 years. Could you imagine a world, the attention span we have now, that it's just flat for 16 years? That's what they had in 66 to 82. So people forget this could happen. They don't want to accept it. And so we're historians trying to find repeating patterns and assuming that it's going to repeat again. That's pretty much our system, putting numbers to it. And then to come say, what about the Fed? What about war? Let's talk about war. Charles wrote a year ago, he did a study that there's been a major war. And again, anyone writes in, we'll send it to them. Every second decade for the last 20 centuries.
Wow. And that's truly amazing, is it not, when you think about that?
100 years ago, we remember. I wasn't there, but
Sure.
World War I. 200 years ago, War of 1812. 300 years ago was the 30 Years' War. And this goes back at least 20 centuries. There seems to be a human condition called go to war every 100 years. I didn't make it. It's just we're looking at it. So you line all this up, is that the reason things will crash? I don't know. And then in the 20s, it looks like things are good. Does it mean someone comes up with a way to find oil, gets rid of all crude need? It could be. I mean, you always hear about stuff because that seems to make the most sense. What's going to cause things to go up so much? Maybe energy costs go to nothing. You know, in which case it's a non-issue. I don't know. In the meantime, crude is going to go up again, according to us having called the top twice. So,
Well, you're very, very good at what you do, so I'm going to believe you on that.
well, you've seen it.
I have definitely seen it, yes, absolutely positively. David, let me ask you then, for time frames, for people that are just, if you think that unemployment is going to start rising, how long is this going to last? Are we looking at 12 months, 18 months, 24 months? Do you think a recession then is in the works?
Keep going.
Longer than that. Do you think we're looking 36 months? Then we're talking 48 months?
To the end of the decade.
No way. So we've got 4 years of pretty soft economy.
Well, that's saying it mildly. What if the Dow gets cut in half? What happens if I hand you the 10 million like I did in 81, right? I hand you the 10 million in 2 years, and rates are rising and the Dow's going down. So bonds are heading down, stocks are heading down. What do? You're a real estate expert, right?
I'd buy some things for cash, probably something that has some use
but I'm
value.
just saying, it's a mindset. I don't have great answers like what to do. Gold, I don't want to talk about because gold, we called the top 4.5 years ago, has been a difficult bottom. We might turn positive, but then again, there's an argument it's going to go way back down again in the next 18 months. So
what's
I
someone
don't
to do for
know.
themselves?
I guess what I'm saying is, I don't think the mindset that we've had for the last 30 years prepares most people to think about what Charles keeps saying, which is think about not losing your money. Don't be so concerned about making money. You know, because that's a mindset we haven't really had. And last year, those who went into the Dow didn't make any money. There were a couple of stocks that did great. Obviously, we all know the FANG stocks did great. but Facebook and that thing. But
And Charles has been absolutely uncanny with his call on interest rates too, because he's been saying it's going to come down, it's going to flatten. He's been talking about deflation for years. I think he was one of the first people to talk about having inflation or deflation, and people just didn't really understand.
Right. We think bonds are a good buy now. We still think it's going to go to 170, the TLT, but at some point this year, we think it bond prices top. We also think, we haven't talked about currencies. We think the dollar is going to be topping, at some point this year. I'll never forget, again, years ago, getting older has some advantages. You remember stuff,
Or still, we can still remember.
We can still remember. Although I'm finding young people have memory issues too. I thought it was just me. Where's your glasses or everything? And then when my kids are, they go, I didn't remember. I go, you 25? You don't have any excuse. I do, right? So the euro was 151 5-6 years ago.
Yes.
7. And Charles sent out a chart, major top. 3 months later was the first Greek crisis. We had no idea what was coming, because that's what the cycles, which only use price, is the only thing it analyzes. We think all things are embedded in price, because price is voting patterns of how people feel about something. It went to 122, then 118. 2 years ago, everyone thought the euro was going to destroy, and it didn't, and we still see it possibly at 130. Americans don't think about currencies, really.
No.
I can tell you that. I have a lot of European clients at Far East. I mean, it's 7 o'clock now in New York, and a couple hours I start my Far East calls with Australia and Singapore, and they think about currencies. We send out a report 3 times a week, which is a daily update on certain stocks, and the S&P and the European stocks and bonds and bunds, which are German bonds, and 5 currencies, and gold, silver, crude, and not gas. Sunday night, we send out a bunch of charts, and we send it out around 6 o'clock at night New York time, which is when the Far East starts trading. And then that's how the world starts. Starts trading Sunday night, and, like Japan was crashing the other day, and I was getting, WhatsApps from my Japanese clients, like, what's going on, which we had just predicted. We said it. He goes, I know, but what can I tell you?
The Chinese call that a very interesting life.
Yes, they call it that, but it's not going to be so pleasant. And
so I guess let me just recap this. It seems like that we've got between now and April a real possibility that we have a real problem with the stock market itself. So we've got a couple hundred points, maybe more to the downside,
right,
on the
S&P.
On the S&P. So we've got on the on bonds, we're probably still good for bonds. Bonds
right.
are probably still going up. Interest rates, that would make sense that as people start going to, and I'm sure that we're talking about government bonds here. We're talking about treasuries.
Right.
I think high yields probably have their own problems.
We don't cover it. We cover the 30 to 10 and the TLT.
So we'd want someone to stay basically in government.
Right. As a trade, not as an investment. Like, I think the 1%, not me, Charles, our team, I'm just the voice here. They're a lot smarter than me. Being in 1% bonds long term is a horrible trade. You're never going to get out of it. Guaranteed money loser.
Guaranteed money loser.
Guaranteed. And it's so much money, thinks that rates can't go up any higher because things have changed. And I said, I don't know, 30 years ago rates were high. 60 years ago when we were born, rates were low. That's a 60-year cycle. 90 years ago in 1920, rates were high. 1890, they were low, and then the Civil War, they were high. So that's a continuous cycle. Is that going to change?
Probably not. I've seen it. It's absolutely an incredible cycle that you send out. It's just truly amazing with your calls.
I think, but I don't know. I mean, maybe they're right. I mean, things do. We're not always right. I mean, we are human.
You're being modest, David. You guys have been uncanny on these things.
Oh, yeah, no, actually, no. We're human. We make mistakes, but it's human design systems will make mistakes. I mean, but we're pretty good. And the best thing about our system, as you know, is that we put in stops, so we're very loss protected.
Yeah. So interest rates probably heading up. So
yeah,
we want to.
I think bonds will be good to the summer.
And
stocks got this down and up, and then end of the year. Let's take it one step at a time. Crude's up, right?
natural gas probably up.
Natural gas is probably up. Been a tough, natural gas is known as the widowmaker. I mean, it's a tough trade. I wouldn't really recommend it for so many people.
Well, some of this has to be along with the U.S. dollar. So if it goes along with your thoughts that the U.S. dollar is going to soften a little bit, then the commodities are going to come up to compensate for
We
that.
don't think that way. We don't think A implies B like everybody else. Each thing is its separate thing. We're not that smart to figure it out.
Okay.
Airline stocks, when crude came down, they went down also. Like you'd argue, why is that? Why is if that's down, why wouldn't the other happen? Because we don't think that way. We just assume every category of data. Have we called Google at the top in January?
Yes, you did. Absolutely.
I mean, I don't know what's going on there. It's just numbers that based on our multiple algorithm analysis technique, it looked like it was heading down. It's not really modesty. It's just we don't think we're smart enough to figure out cause and effect.
Okay, so we've got stocks down, bonds still up for a little while, but long term they're a losing trade.
Right.
Gold has just kind of been staying pretty much where it's at. You have any
Gold's
thoughts on that?
rallied recently. Gold, with cycles are topping now, so we don't think cycles support this up move. Gold's caused a lot of pain to a lot of people.
It just doesn't seem like it.
The Canadians and the Australians who stayed long, How much could it go down? I'll never forget the Canadian. Look at Canada. Look at the whole country.
Brutal.
They had crude up, gold up, silver up, nat gas up. The currency, we just made a great call on the Canadian dollar. As a matter of fact, I'll read you what we said today. Now, again, we're not that smart. Everything is following patterns. Let me read the Canadian dollar. Yeah, I'm going to read what we wrote today. The dollar Canadian remains in a sell signal as long as there's no close above $140.45 Canadian. So far, it came close to our downside target of 136.20 after we called the top around 147. So we called it. But Canada's a whole different game than it was a couple of years ago. The TSX we called from 12,000 to 14,000, even though it was made up of gold stocks and gold companies that wouldn't have justified. So we don't know why things happen because our logic, we don't think most people's logic can explain it, but certainly we can.
Okay, so the best thing for someone could do would be to maybe hedge their portfolio if they know how to do that,
Right.
or maybe it's not too late to get out for a little while.
That's what we think, but that's a hard decision.
It's a hard
That's when
decision.
you got beat up. You're fighting in a game. You in a boxing match. I don't want to use that analogy because that is what it is. But if you're down in a basketball, I was a basketball player, as you know, and I think of basketball a lot. And when you're down 20 points in a game, good coach will say, cut it to 15, cut it to 10, cut it to 7. Then it's a different game. Trading's not that different. If you're down, forget the fact if you have $1 million and you're down to 800,000, you're down 20%. You have to make 25 to get even. Your mindset doesn't function the same way. So the goals, if you had $1 million, all right, keep it at 970. You're in the game. Once you're down a lot, it's hard to play. You're still 20 points behind, and that's a mindset that affects you.
Well, of course.
And that's why you're asking a good question. People are down there, they're going to get hurt more. Hard to hear. I mean, that's what I do all day, talk to people. If we were right here, is it possible we'll be right now?
Good possibility.
Very hard for them to hear that a wave's coming down and the cycles are topping. Like, what does this all mean to people?
If you lose 40 or 50%, it's hard to then think, well, the cycle's turned, it's time to get back in. Most people say,
And
no,
then go borrow money to invest again.
I've had plenty. I'm not going to do this again.
It's
So
not
they're
happening.
better off take their 15% loss now rather than a 30 or 40
Well,
in a little bit.
I mean, they could actually make money now if they. I don't know. It's not so simple. It's easy for me to say. I'm talking about their money. We don't manage money, so that's another thing. We sell research. Everybody, it's their money, so we're not. We don't want to focus on that. It's a whole head to do that.
Well, you keep saying if they write into you, and I think this is a good way to end this, is if they really the average person really could use your research. And when you say right into it, I think you're talking about going onto Charles Nenner Research website.
Right. Google
And
charlesnenner.com and write and say that they saw us speaking, and we'll give them a free month to look at the research that comes out Monday, Wednesday, Friday, the update, and then the Sunday charts. And then, we have clients of all types all over the world: sovereign wealth funds, family offices, hedge funds, brokers, normal people.
even some real estate agents.
Even some real estate people. Although real estate, as you know, real estate is bricks. You guys think about bricks.
Absolutely.
It's real estate. Look, you've done pretty well, Michael, with real estate, right? So
Real estate's been good to me. David, we're going to call it at this point. Thank you so very much for spending a little bit of time with us. And I hope everyone writes in and takes advantage of that 30-day free trial for you.
Pleasure, Michael. I look forward to the next time.
Thanks much. Bye-bye now.
Okay, bye-bye.